What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we see the bulls bouncing from the very critical support zone, but is it going to be enough to fight off the bear from the resistance bear market trend line? And we have a huge week ahead with CPI data tomorrow and FOMC on Wednesday. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today in SPY, we were up 1.44%. And again, we see the bulls showing up at that support zone at 393. And if you just draw a horizontal line from this level, you could see the bulls have been making profits from buying at that support going all the way back through November. So as I always tell you, know your support and resistance levels and try not to be bearish at support. Wait until the support breaks down and then you have confirmation the bears are pushing for that next leg lower. And right now the bulls are still showing up at 393. Now one more thing to note is that it does look like the market is trying to roll over, and SPY just barely squeaked out a close back over the 20 daily moving average. So this is going to be a very critical resistance zone right around 399. Because the bears can now use this as a resistance to drive price lower. So tomorrow will be CPI data, and there is very likely going to be a very large move in the market. And then immediately after that on Wednesday, we have FOMC. So this is going to be a very volatile week, but we're not going to know the next leg in this market until we break out of this sideways consolidation. If you just draw a horizontal line from today's close, that is exactly where we closed 1 month ago. So in one entire month, the market has moved absolutely nowhere. That very likely means the next breakout is going to be a very large move, and that is why we are seeing the daily Bollinger Band squeezing. So do not get FOMO, just have a plan that is ready to trade the breakout in either direction, and there should be plenty of room left in that move to make a very solid trade. Now another thing I want to address is a lot of people are saying this resistance trend line is way too obvious. And it's not going to work out because it's just too obvious and everybody's looking at it. But the point I'm trying to make about this resistance trend line is it's not a matter of whether or not it's going to work. It has already worked. We have already seen price action rejecting from that level. And we did get a red weekly closing candle last week confirming the pivot from that high. So there's no way you can say that resistance line is too obvious because we've already rejected from it. And that is objective, and then we came down and broke down through the support trend line. So if you're having trouble seeing it, this is a very clear pivot. We got rejected from the resistance trend line, and then we had a daily close below the support trend line from all of the higher lows. So without a doubt, the bears are still driving this market, and it is still on the bulls to prove everything. So far, the bulls are proving they're buying at 393, but that can change very quickly once that support level is lost, and we could see the elevator down to fill the gap at 381. So try not to think just because everybody sees something that it's not playing out, because the definition of being objective is following what the price action is telling us. And the price action is telling us we got rejected from resistance and lost support. And there's only one more support level left for the bulls at 393. And that is the level that is going to confirm the next bear market leg lower. Now the bulls could still reverse this on the bears. And in order to do that, they're going to need to break 399. Get back over this negatively sloping 200 daily moving average, which is just below 403, and then start getting daily closes above the bear market resistance trend line and get that break above 408. So there's a lot of work for the bulls, and that doesn't mean it's not possible, but it's on the bulls to prove it, and you're much better off following the larger degree bear trend, which is still a lower stock market until the bulls prove otherwise. Now going into tomorrow, it's very likely going to be a large pre-market move, so you do want to wait for the confirmation for the next bear market leg lower on the breakdown below 393, and the next bull market leg higher isn't until we break all the way back above 408. So there's a lot more room to the upside that the bulls need to push through in order for them to get that bull breakout. So have patience, know both scenarios, and then let the price action guide you on where we are going once we get the breakout of this sideways consolidation. On the NASDAQ 100 triple Qs, we were up 1.26%. And again, the triple Qs continue to bounce off of that bounce or die support zone around 280 to 282. The reason this is bounce or die because if we break below the neckline at the support at 280, This is going to look like a confirmed double top from 293, which easily sends us down to 268 to close the gap. Now the bulls could also turn this into a multiple bottom look by getting the breakout above the resistance at 293, and that should be enough of a breakout to close the gap at 308. So as you can see, there are still valid trades on both sides of the trade, but you don't know which one's playing out until we get the confirmed breakout. So for now, watch that very critical support between 280 and 282, and the extremely critical resistance will be up there at 293, and on the way to 293, look for resistance right around 288. You could see the daily chart did close below the 20 daily moving average, and the 20 daily moving average is starting to roll over and starting to become a negative slope. So you could easily see a scenario where the bears use this as a rejection and then drive price down below support below 280 and then start driving price down towards filling the gap at 268. So the bears are still driving this market until the bulls get that breakout and close above that critical resistance at 293. On the Dow Jones DIA ETF, we were up 1.57% today, and the Dow Jones did close back over the rising 20 daily moving average, so they did fight off the bearish look from the rejection at that level. The next resistance in the Dow will be 342, and then above 342, we will be looking for the full gap close just above 347. Now, I still think there's a good chance we are going lower to fill the gap at 331, and we do have more time to the downside to get there if we do see the rejection at 342. But you instantly need to get a lot more bullish that this is not playing out to the downside if we break that resistance at 342. So we'll know as soon as this week which direction the markets want to go, but right now there are clearly mixed signals and we are still seeing bulls showing up at these support levels. On the Russell 2000 IWM ETF, we were up 1.18%. And we bounced back up from this support at 178 up to the 50 EMA of resistance just below 181 and closed right there at that resistance level. You could see price action is still below all of the moving averages. We still have the confirmed double top while we're below the neckline at 182, and our valid downside price target is down here at 176. And if we break that support, we could come down to 174 or the low 160s. So as I continue to show you, the bears are still driving this market, and you see these bearish double top rejections, which are confirmed, and we're starting to see the Bollinger Bands opening up, which is going to allow for more volatility. So the small caps could be showing us what's coming in the rest of the market, just leading the way lower. But we're not getting bullish in the small caps until we break resistance at 182 to 184 because we have this valid double top that has not yet met the downside price target. On the ARKK ETF, we were up 1.9%, and we see ARKK is holding above the support, which was that gap close at 34. But overall, we are still seeing price action below a negatively sloping 20 simple moving average and 50 EMA. So we are clearly still in a bear market. The critical resistance ARKK needs to break is 38, and on the way there will be strong resistance around 36 to 36.5. On a break below the support at 34, look for a retest of the 52-week low at 32.5, and the next leg lower will be 31.3 and $30. On the VIX, we were up 9.6% today, and this did confuse a lot of people today because the VIX contract was rolled out from the December contract over to the March contract, so it does look like the VIX jumped up very large today, even though it really didn't. If you look at the December contract, we were still trading somewhere around 23. So yes, the VIX is above 24, but I wouldn't put too much weight on that with today's price action due to the contracts rolling out. But all you need to know is that the VIX is still rising, and we are still having a VIX that is bouncing from that support zone at 20, which is exactly where the bears have been stepping in all year long in this bear market. So continuing to expect a very volatile market and get ready for the breakout in that next leg higher or lower based on where the price action tells us. On Bitcoin, we're currently up 0.57%, and Bitcoin is still holding above that rising 20 daily simple moving average, but has not yet broken the resistance at 17,550, which is what needs to break to send Bitcoin to the next leg higher at 19,000. The critical support remains 16,000 because if we break below that, you're getting ready for the next leg lower at 14,395. On Amazon, we were up 1.64% today as Amazon is bouncing from this lower Bollinger Band support zone right around 88. And you can see this is very clearly looking like a bear flag while Amazon is struggling to break back over this resistance around 90.6. Below this, we could still see Amazon retesting the 52-week low at 86, and below 86, we could see the next leg lower at 77. There's always the possibility of a higher low or double bottom, so we'll get a lot more bullish if we see Amazon getting back over about 94 to 97. On Microsoft, we were up 2.89% as Microsoft is bouncing from the 50 EMA, coming back up towards this resistance trendline and resistance zone around 252. And this is going to be critical resistance because we could easily see the bears rejecting from here, making another lower high. The bull breakout will be above the previous daily high at 255, and then above 255 we will be looking for an upside price target at 265. A rejection from 252 should send us back down towards support at 242, and if we lose the support we will be looking for the gap fill at 228. On Nvidia stock, we were up 3.14% today, with Nvidia bouncing off of the support zone just above 166 and closing right on top of the negatively sloping 200 daily moving average. This is starting to look like a bull breakout if we continue higher from here, but we need to see follow through, and this needs to be more than just a one-day event. If Nvidia can break out above 175 and 179, we will start looking for a bull market in Nvidia stock that could take us back into the 200s. But if you look at this resistance trend line and the negatively sloping 200 daily moving average, this is also a great risk reward short trade for the bears, and they do have that gap to fill to the downside at 142. So I still think there is a very good chance the bears show up at this resistance at 175, so be very cautious taking longs from this level. The critical downside support remains 166 and 156, because if we lose all of that support, we should easily fill the gap at 142, and the Bollinger Bands are starting to expand, allowing for more price action movement. On Tesla stock, we were down 6.27%, and on Friday I told you be very cautious in Tesla, because if we break the neckline at 167, this is going to look like a double top from 197. That could easily send Tesla down to 138 with support on the way there, likely right around 155. However, that does require a clear break of support at 167, and so far we closed right on top of that support, so we don't have any confirmation of the double top until we close below that neckline. However, the downside risk remains immense, and you can clearly see it's in a strong bear trend with the price action below all the moving averages, so continue to be very cautious of more downside if we break down below 167. With that being said, we'll be getting a lot more bullish if we can clear resistance around 184 and 197, and once we break through that resistance and invalidate the double top, then we can get a lot more bullish in Tesla stock. On Apple stock, we were up 1.64% today, and Apple continues to bounce off of this support zone at 141, and we're back over the 5 EMA. However, Apple is still below the bear market resistance trendline and critical resistance zone at 146, and as you can see from the moving averages, they are all still favoring the bear trend, which is going to likely send Apple lower. So look for Apple to continue to reject below 146 in the bear market scenario, come down and fill the gap at 138, and likely continue lower to try to fill the gap at 133. Now, if we do see Apple break the resistance at 146, then we can instantly get a lot more bullish, but you need to let the bulls prove it by waiting for the price action breakout. On the financials, we were up 1.33% with that bounce just above the gap close, which has not officially closed until the financials come down to 34.35. The industrials were up 1.72% today with the price action getting back over all of the moving averages, but there is still the chance of a lower high rejection and coming down to fill the gap at 97. The healthcare sector was up 1.07%, continuing to look bullish with the price action above all of the moving averages and the very strong bull trend. The energy sector was up 2.62% today, finally getting that dead cat bounce after consecutive closes below the lower Bollinger Band, and we are back above the support at 84. You could try to stay bullish above 84 for a short-term bounce to a lower high, but if that support level is lost, you will be looking for a trip down to the rising 200 daily moving average. So jumping back over to the S&P 500, this is a very critical week because we have the CPI data and the FOMC, and the market has gone absolutely nowhere for an entire trading month, which means we're about to see a very large move in the market. Anytime the market consolidates for such a long period of time, there is going to be a large enough move for you to capture a very significant chunk of it without having to guess the direction. Simply wait for the confirmation of the breakout in the price action. That will confirm the direction of the next leg in the market, and then you will have a much higher win percent chance on your trade, and you'll know that you're on the right side of the trade instead of guessing. In the meantime, you can trade the range knowing you need to get out if you get a breakout in the wrong direction, then you can instantly go to the other side of the trade and be on the right side. So just know both scenarios and don't bother trying to guess which one's going to play out. because you could flip a coin and be right 50% of the time, but that is not going to help you be a better trader. You need a price action disciplined trade plan with proper risk management to be a profitable trader, and not just guessing right or wrong on a very likely binary event that 50% of the people could guess correctly and it wouldn't mean a damn thing. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to learn how to subscribe, just click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.